Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 9th, 2023. And it's been a 23-day sideways accumulation, right? I think 23 days. But here's why you should still be bullish, technically speaking, if you're looking at the charts and you're not necessarily playing into your emotions. We're going to talk about that, all right? I know it's not fun. I know crypto's not exciting for most people right now, but you know, this is a daily show. I don't do daily updates when the price action has this little volatility, but I do think it's important to check in from time to time. So I'm going to talk about why, given what we're seeing on the charts, on the small time frames, on the high time frames, not only should you be bullish, but you should be preparing yourself for a very strong move. Guys, if that sounds interesting to you, then watch until the very end. Let's start off on the really high time frames, okay? Because I see a lot of really bad analysis. And hear me out here. I know it doesn't make sense to say some analysis is good and some analysis is bad based off of if they play out or if they don't play out, because it's really hard to say. Nothing's 100%, but I'm going to tell you what bad analysis is. Bad analysis is ignoring basic fundamental tenets like support and resistance, right? Bad analysis is drawing random lines in random places. Like, for instance, if you look on Twitter, on X, whatever it's called now, everybody and their mother is drawing this, right? Crypto banter, drawing this line right here and saying, you see, let's this is bad analysis, right? Just hear me out here. So, and I hope you're not doing this, because they're saying, see, this is the line that Bitcoin was on and had been retesting since the beginning of the year. That's true. But they're saying this is an example right here. This price action is an example of broken support. And so we should expect a move back down as a result of this broken support. That's terrible analysis. I'm going to tell you why. Okay. It's bad analysis because it ignores the basic tenets of support and resistance. If you look at what we've been doing for the past 450 days, we've put in very clearly a really clean inverse head and shoulders, okay? Whatever you call this, it doesn't actually matter. What matters is that there's a very obvious neckline right here, and we broke it right there, and now whatever we did here, whatever you call this, again, doesn't matter. We're hanging out. We're finding support on previous resistance. So previous resistance flipped into new support. That is a fundamental tenet of technical analysis. It's an RS flip, right? Resistance to support flip, right? So resistance was here, right? At the 25.9 mark, 26K mark. Broken in March of 2023, and now flipped into support, doubly tested with this WXY or ABC flat correction. Okay, so this is why, just on a really high time frame, it should be relatively simple to read. Okay, there's certain things in technical analysis that are quite challenging, quite difficult, but basic support and resistance, especially basic horizontal support and resistance, is not. It's not one of those, right? Some of the hardest stuff is to time the moves, right? To tell when a consolidation is going to break, or what exactly the shape of the consolidation will be, what shape it will take, if it's going to be a zigzag, if it's going to be a flat, so on and so forth. But this shit is as vanilla basic as it gets. To add to that, looking at your weekly, and we're on the weekly time frame, your stochastic RSI, right, your basic momentum indicator, is telling you that you're bottomed out, right? If this momentum indicator on the high time frame was up here, maybe you could make a case that you're coming down. Okay, but again, this is basic support and resistance, 26K has now been flipped into support, right? You have, look, if you look, you don't even have to look that closely. Again, this is a simple read. If you just look at the chart, you can see on the weekly time frame, every single time you came to this purported support, let's just call this purported support, right? What you did was you quickly reacted and you bounced off of it, as designated by the stem, right? You call that a hammer candle, right? With a big stem, meaning that there's strong buy pressure here. Okay, so strong buy pressure at what we're thinking is support is just another data point telling us, yes, indeed, this is support. Every time we hit it, the buyers step in quite forcefully, right? So every time you hit it, you don't see candle bodies. What you see is candle wicks, and that tells you that you're more likely than not on the higher time frames to move up from here. Okay, so that's a high time frame read. And I wanted to say that because there's a lot of big accounts telling you that be careful, brace yourself for 12k Bitcoin. Like, again, nothing's 100%, anything can happen, but that just sounds stupid. It's inconsistent with any with any basic technical analysis, with any sound technical analysis. So I hope that was conveyed, and it's not just a random opinion, right? We're basically just looking at the charts. Okay, next, let's zoom in a little bit. Okay, so let's zoom in now on the 4-hourly time frame. And guys, don't forget to like, share, and subscribe if you're getting value. Now, on the 4-hourly time frame, we've been in this 23-day channel. And basic channel trading 101, right? A channel always has a midline, a top, and a bottom. Okay, this is clearly the bottom. This is clearly the midline, right? It's just, even forget how I drew it. You could just look at the price action, and the price action says that this is a resistance, this is a resistance, resistance. You can very easily tell. So how I drew it is consistent with what the price action is telling us. And remember that in a channel, the midline is resistance when you're below it, support when you're above it. Okay, so this is clearly the support because all of the wicks come down to that. And again, if it's not support, you're not going to get strong buying pressure every time price comes down to this level. Do you see that? Doesn't mean you can't break down, okay? Doesn't mean you can't break down, but insofar as this channel's concerned, right, whether we break up or break down, that's a different story. But just considering the price action in this channel, this is support, whoops, this is support, this is resistance, this is the midline, okay? Now, if we're agreeing to that, we can agree to say that one, you typically make moves from the bottom to the top. What does that mean? So, is it possible that Bitcoin move up from here directly? Absolutely. We can break up from here, and we're actually, the idea of the 4-hourly time frame being all the way down here on the momentum indicator lends credence to this being a probable move. And I'm going to tell you another thing that lends credence to that in a second. So yeah, this 4-hourly candle that you're seeing is almost closed. As you can see, there's 25 minutes left as of when I'm recording. So we should be able to see rather soon what is to come of this. So typically you start from the bottom, meaning you tag the bottom, then move to the top. Okay, but this may have been the last tag of the bottom. Okay, anyway, you want to start close to the bottom, right? And that's what you should expect. And then once you get to the midline, you should expect some resistance. If you fly through the midline, what you should expect is a retest of the midline as support before continuing. Okay, so that's basically on the 4-hourly time frame what we're looking at. Now, going more into on the smaller time frames, just going into the hourly time frame, I just want to point something out. If you look, now you have this other range on the hourly time frame, right? I'm referring to this range, and this is a range that we've been in for a few hours now, right? This is the hourly time frame. This is a day and a half, or more than a day and a half, a day and 13 hours, right? So that's like 37 hours of just being in this range. Now, can this range break up as it is? Whoops. Sorry about that. Can this range break up as it is? Absolutely. Or will it first tag the bottom before continuing? That's what you typically see, okay? What you typically see. And also look at our momentum indicator. Our momentum indicator is overbought. But when you have a strong bullish move, don't worry about overbought and oversold on the small time frames. It's irrelevant, right? And why is this likely a strong bullish move? Because remember, we've been in the larger channel, right, for about 25 days with very little volatility. So what's that mean? In layman, very simple plain speech, it means that for 25 days, people buying and selling the asset have had to do so in a very restricted range. Okay, very restricted range, meaning if you bought Bitcoin within the last 25 days, you weren't buying, if you bought or sold Bitcoin rather in the last 25 days, you pretty much bought at the same price as everybody else. So if everybody's agreeing on the price of the asset, why then is low volatility a precursor to a massive move? Well, it's because it only takes a large buy, right, which is going to be different from the buying of, it only takes a large buy or a large sell to push this either up or down, okay? And again, if you look on the really high time frames, it's more likely than not that we go up because we're on this massive 450-day support, right? As we spoke about on the weekly time frame. So again, it only takes one massive buy, but what do we know about Bitcoin? What do we know about crypto, risk on assets? It's not really about buying and selling the asset. It's a $500 billion market cap. It's more about the price of the US dollar fluctuating up or down, which is going to pump liquidity into these markets. So it's more likely than not that these channels, this channel in particular, 24-day channel, is going to break up and out, not only based off of the US dollar, but also based off of any gaps in trading, right? CME gaps, Chicago Mercantile Exchange gaps formed by, the US dollar currency index closing and Bitcoin continually trading on the weekends. So really simply, without even pulling out the indicator, I'm going to say this. On the 4-hourly time frame, what you can clearly see is that Bitcoin was trading on Friday evening around the same price, okay? So at the close of the DXY, the close of traditional markets, Bitcoin was trading right here. Don't be surprised if it continues to trade here throughout the weekend, and on Sunday evening on pre-trading, New York time, pre-trading of the US markets, when the DXY opens up, then you start getting some sort of move up and out of this. But even on the small time frames, right, we talked about minimal volatility. This is either going to break up or down violently, okay, just on the smaller time frames. And again, looking at this 4-hourly indicator, momentum indicator, being oversold, we can still break down, but the breakdown's not going to be, there's not that much move, there's not that much room to go to the downside, right? One should expect on the smaller time frame as a result of that analysis a breakup. Guys, that is my analysis on the small time frames and on the larger time frames, okay? And if you look at altcoins, well, actually, let's look at two things. Let's look at the DXY first, because we always talk about the DXY. It's very important. And the DXY, as you can tell, and as you know, if you've been following my analysis, it's been hovering for so many days above major resistance, but not breaking out from there, literally hovering, right? And this is exactly what I'm talking about, where you break this, you retest it, and you're just hovering, and you're waiting to distribute to the downside. All your momentum indicators are overbought. Okay, so on the hourly time frame, you're overbought. On the 4-hourly time frame, you're actually oversold. But on the daily time frame, you're overbought. On the weekly time frame, you're overbought, right? Weekly, daily, 4-hourly, you're oversold, but you're looking like you're about to cross bearish. And on the hourly, you're overbought. 15-minute, you're oversold. So anyway, major time frames for the DXY are overbought. They have been for quite some time, right? You should still expect that massive move down, and again, a massive move down in the dollar is going to it's going to create a massive move up in crypto and risk on assets, Bitcoin, all that stuff. Okay, last thing I want to look at, well, second to last thing I want to look at, because I also want to look at some altcoins, right? Is the Bitcoin dominance. Okay, remember, Bitcoin dominance is going to go down when everything's going to rally to the upside. So we want to look for what Bitcoin dominance is more likely than not to do. Okay, again, on the daily time frame, you can see that it's pointed up, crossed bullish, but it looks like one of those moves that's already exhausted and at any time is going to turn down. On the 4-hourly time frame, you're actually in oversold territory. But again, looking at this, it looks to me like some intra-wave correction that's preparing to distribute. Okay, I actually see it as a sort of head and shoulders bearish distribution pattern. I don't know if you can see that. Again, this is my left shoulder, this is my head, maybe this is my right shoulder, something like that. So this is what I'm looking for in Bitcoin dominance. And again, this is what you want if you're expecting the market to rally to the upside. Okay, last but not least, let's look at an altcoin or two, because if this is indeed, and I say this all the time, but I will reiterate this point, if this is indeed a whole market move, what we're going to see is our altcoins front running that move. So actually, first, let's double check on our general watch list and see if anything hasn't run yet. Okay, nothing's run yet. I'm looking at the largest percent change, and Stellar Lumens is up 3.7%. That's nothing to write home about. Nothing's up majorly. So everything is pretty much stuck in the mud at this point. Okay. If we look at the, I had it open. Let me open it for y'all. If we look at the total two, okay, we're not gonna look at all these altcoins individually, but we look at the total two on the 4-hourly time frame. Like Bitcoin, you're in oversold territory with this 4-hourly time frame. Okay, you're in oversold territory. You're actually looking to create some sort of bullish divergence here. Okay, maybe not a large bullish divergence, but in any case, you're in oversold territory on the 4-hourly stochastic RSI momentum indicator. On the hourly, you're in overbought territory, but just the way this is playing out, it looks more like it can break up and out. Okay, and the last thing I want to talk about is the fact that if you look at this, range in the altcoins, and you say, well, upon first glance, it seems like there's space to be filled, right? Because this seems like the sensible range of the price action for altcoins, and I would say maybe, but here's why that technically may not be the case. Okay, and I actually looked at this because I was like, there's some space to be filled here, and altcoins may have to do that before doing this. Yeah, but if you look at this range of 24 23, 24 days, and you just count the flat correction pairs, okay? The corrective pairs, what you see is this. This is one pair, okay? This is two pairs, and all of this is another small range, which could be considered another pivot. But basically what you're looking at is not having to make the room up here, but you want to be looking at this as your range, where if you do get a declension, if you do get a drawdown, you're looking at a drawdown to the bottom of this range, okay? And that is really comforting to me as a trader, you know, looking for, you know, downside, always preparing for downside potential, right? So that's basically what I wanted to say about this, and the fact that if you think of this as a purported or potential wave 4, you know how wave 4 typically they're complex and they can take a hell of a long time. Maybe this is an Elliott wave impulse to the downside. This is the wave 4. You're still waiting for wave 5, something like that. Well, the great news about that is if you look at this as being wave 1, 2, 3, 4, and 5, it works out using the math, right? The Fibonacci extensions show that that wave is complete, all right? So wave 1, retracement of wave 2, you should expect wave 3 between the 1618 and the 2 Fibonacci extension, okay? So that's exactly what you have here, right? And if you go down, you can see that the wave 5 comes down to around the 2236, which is more or less where you get wave 5 extensions, okay? So it's more likely than not, technically speaking, this is done, and this can be a simple consolidation or accumulation after this drawdown. So that's my overly technical reason for kind of not taking completely off the table, but saying that there's a technical likelihood that we can go from here and not have to worry about a full drawdown to this larger range bottom. Guys, I hope this was helpful. I hope this was useful. I know there's not much going on in the market, but it's all about being prepared. Being prepared so that when it does happen, you do get to experience the massive rally that is going to come. Because yes, it will be a massive rally. Guys, take care, and I'll see you next time.